episode of our Incubator podcast. I'm here with John Kenny from Cotney Consulting Group, and I'm here as always with my friends and industry killers, I like to call them, because when it comes to insurance, there's not a better organization out there. So guys, how about you introduce yourselves and tell us a little bit about yourselves and let the audience know again.
Certainly. All right. Well, John, thank you very much. Again, Tyler with Furman Insurance. And so our agency specializes and have a focus on controlling the insurance and most importantly, risk management for roofing professionals throughout Florida and majority of states in the country. So I'm one of the agents here at Furman Insurance, and my partner, Nick here.
Nick Ondo. We serve probably 194 roofing contractors here locally and nationally. Love to jump on these webinars and be able to share our experience with many of the pitfalls that either an emerging roofing contractor runs into or a more further established roofing contractor runs into. And today we're going to talk about controlling subcontractors. You know, we speak to a number of roofing contractors every week that work with subcontractors. And most of the time when we bring up the subcontractor piece, everyone's like, you know, we're great. We control them really well. We collect certificates of insurance. And as, you know, advisors to the roofing industry, we kind of cringe when we hear that, because it's like, that is really great, a great start, but it goes a lot deeper than that. So that's what we're prepared to speak about today.
Yeah, I mean, it's a great topic. I know I too work with a lot of contractors, and controlling subcontractors is a lot more than just having someone sign an agreement that you hope is, you better have it well protected. But I know you guys will get into a lot of coverings. The insurance is a big issue. One is, and I'll come right out and say it, whether it's real right off the bat to begin with. I've seen a lot of that fly around out there. I've worked with contractors that don't have the proper flow down and all the other good things that go with it. So I know you guys are ready to hit that. So that being said, let's jump right in. I mean, let's talk about the subcontractor agreements that are in place. So what do you guys see out there when you do that with insurance?
Yeah, and certainly. And so, you know, initially we provide to some of our clients what it is essentially a checklist. Of course, we're not attorneys, so writing the actual language that are in the subcontractors agreement, we don't get involved with. But on the insurance side of things, making sure that we have a checklist in place that goes through a number of things, that it's just a starting point, which is making sure that, number one, that they have coverage and a certificate of insurance. We're always happy to review our clients' subcontractors agreements, making sure that they're requiring the proper limits and what they should be looking for. But it goes a little deeper than that. So making sure that there's proper hold harmless language in there, making sure that they're carriers of at least an A7 or better financial capacity, making sure that there's waivers of subrogation in place, the right proper additional insured wording, and essentially just a list that they need to go through whenever they start a job and make sure that they're doing the proper steps before they even think about taking a subcontractor on. Because, of course, your insurance is there, and we structure our insurance programs to cover our clients' subcontractors if those proper steps weren't taken. But sometimes you'd be subject to larger deductibles, et cetera, and pitfalls from the subcontractors' insurance exclusions, limitations, whatever they may be. So that's where we start off, is that checklist to make sure our clients are at least aware, and we try and educate them so that they know what to look for initially. And that helps them be able to point out any downfalls they may see, and then they could always run it by us, because we're not there in the office every day. We're certainly tell our clients anything you want us to review, we can, but they need to at least know and be aware of what to look for and what may be some red flags initially.
Yeah, I think a lot of times, especially roofing contractors, are just happy to have a subcontractor on board to help them do the work. They forget about the future liability and current liability if it's not properly written in there. So that's a good point. I know I see a lot of subcontracts written that cover the basics maybe on the legal side, but the insurance side is just kind of wide open if there's anything in there at all. So that kind of brings us into the next good portion of this, is about the transfer of risk downstream, because to the subcontractor, because I think a lot of our roofers are not really the primes on the job. A lot of them are also subs, or they're working for an owner direct, but still makes them almost like a middle person. They're not usually the one totally controlling the playing field in all their circumstances. So would you touch on that a little bit? Do you recommend?
Certainly. So, I mean, we talk about subcontract. I mean, how many of our roofing contractors get a job with a prime home builder or something, and the subcontractor agreements are super cut and dry, and it's like 100-page long contract, right? Well, there's a reason for that. The reason for that is primarily because those home builders and things, those more established buildings, have experienced claims from subcontractors rising upstream, and the home builders, balance sheet taking the hit from a subcontractor's subpar, for lack of a better term, insurance program. Certainly, we understand that the title of this is controlling subcontractors. We understand that that's a little bit of an oxymoron in the grand scheme of things. But one of the only ways that there can be any controls of the subcontractors, at least on paper and legally speaking, is through the way that the subcontractor agreement is written. So as Tyler had said, it's critically important that to avoid claims rising upstream from your subcontractors, there needs to be hold harmless language in place. There needs to be waivers of subrogation in place. There needs to be kind of a list of what insurance policies, the strength of the provider financially, what the limits look like, and things like that, to make sure that anytime that you hire a subcontractor, that your firm is protected. Because a lot of folks in the industry we see think, okay, we've hired a subcontractor, they have insurance because they showed us the exemption on work comp, and they showed us, $1 million limits on their general liability policy. But when we go to request the forms and endorsements of that policy, because that certificate of insurance, and I'm kind of going to the next couple pieces of our discussion here today, but when you request a certificate of insurance, what it tells you is the expiration of that policy. So the policy is active. It tells you the carrier, and it tells you the limits of the coverages that are on that policy. What it does not tell you, which is of utmost importance, is what that policy actually covers, more specifically what it doesn't cover. So we've had roofing contractors, they ask for, a certificate of insurance from their sub, we get it, and then we also request the forms and endorsements, and on their policy there's a roofing exclusion, or there's a water intrusion exclusion, or this policy on the work comp side of things, they show an exemption, but they are saying they're going to bring 15 guys to the job. Well, John, you're well aware, especially in the state of Florida, that that exemption only works for the one single owner or principal of a company. And in Florida, there's a website. I'm sure most states have something that help you be able to verify that information. But like you said, when we first started this thing, it's really important to know that the subcontractor, one, has the insurance, what it covers, but they can make any of those things up. So it's really important to consult with somebody that does the insurance every day to be able to say that this carrier exists, they have this kind of financial strength, these limits are in place, but those limits that are in place also cover what we think it's covering.
And John, to add to that, this podcast is a series for a lot of emerging contractors, right? And so as we meet with some emerging contractors, because we handle anywhere from very established firms to help emerging contractors themselves realize what they're getting into. And one of the struggles that we deal with, I think this is very important, is so we meet with people, roofing contractors feel for whatever reason that, hey, because they're a subcontractor to a GC, to a home building company, even if it's just a property management company, HOA, whatever insurance standards they're being held to, there's a lot of times where there's some direct labor force directly in-house. What they don't think is that they have to hold themselves to a different standard than that GC or property management company, or whoever is then in turn requesting them to provide the right insurance to the GC. GCs are protected very much by hiring in their vetting out process, by hiring a roofing contractor with the proper protocols in place, and they stick to them very firmly. We advise our clients hold themselves at the same standard as that GC. They're hiring and they look at their labor force or subcontractors. Some of them look at it as just an extension of their workforce, and it's not. There's contractual agreements that need to be in place to properly transfer that risk downstream the same way the GC did to them. And so again, as contractors are emerging, subs are not just an extension of your workforce. They're absolutely, and you need to, when acting and hiring a sub, you are now the acting GC. I know for lack of better words, but But that's one of the things that we constantly share with our clients, that they need to hold themselves to that standard. So not just allowing anyone on their job site, having their insurance or legal counsel review contracts and make sure that the proper downstream risk transfer is in place. Because ultimately, it's not the GC that it's going to rise up to last. That GC transfers the risk to you as the roofing professional, and you're the next layer of defense from the sub that you hire. So they have, and they are protected by your layer of defense. So they typically tend to not look past or care about what the sub has in place, because they know your insurance is going to kick in once they reviewed it. And they know that it's going to be your loss ratio that's affected and your premiums that go up if that sub, the proper risk transfer wasn't passed on. So anyways, as roofing professionals, a lot of them is a specialty trade contractor. We just, not so many are trained when starting out to do those proper risk transfers. And that's what we're here for, you and I, John. So anyways, that's an important piece of it, something that we just can't look past because it's very important.
I know one question I want to throw at you guys. I get this all the time, and I know I've had to experience this myself through the years. And yes, incubator program, we will love working with emerging, but there's a lot of information, especially on this topic, that I feel contractors that have been in business for years have a lot of loose ends on. So this is a huge topic for the industry. But the certificate of insurance. So if you're my roofer, I'm working for you, and I'm going to give you a certificate of insurance, what is the way that you should require that certificate of insurance to get into your hands to basically limit the amount of chances that it's going to be a fraudulent certificate?
Yeah, so Zach, so I've seen a number of fraudulent certificates in my past, and you know what, John, I shared with you as an insurance agent. I actually, my true feelings are that there's a little bit of a flaw in the system with certificates of insurance. And so they really are only as good as what they say is on paper, and they show very limited information, expiration dates. You know, you're going to put in the additional insured wording, and some of the GCs require stronger wording in the description box, but it really only shows that, hey, if it's a real certificate, coverage is in place, but not necessarily what that. You could have $1 million limits on a GL policy that covers nothing but slip and falls. And so that's why we share with our clients that certainly there are steps that we're looking for. We're looking to make sure that they have the coverage, that they have $1 million limits at least, or minimum equal to or greater. Now each line of coverage will be different. Sometimes you're requiring $5 million umbrella limits, et cetera. But it's showing the expiration date and the coverage limits, but not what it's covering. So we require that they, we certainly ask our clients to require from their subs that that's on file, but we even take a step deeper. And what we advise our clients is that certificate is one thing, but the only way to really be certain is we like to review an actual copy of the policy, the forms and endorsements, and dig a little deeper on what that policy, the subcontractor that you're hiring, is actually covering, because it could be a real certificate, John. Sometimes I find that not even the bigger concern is that the certificate's not real. Of course, that's a huge issue, but so many certificates that you're receiving may have just one little limitation, one exclusion, one, no wording on the additional insured covering completed operations just versus ongoing. Could have the coverage, and, of course, these claims can arise for construction defect issues 3, 4, 5, 10 years down the line. And so it's really digging into the policy and the forms and endorsements and seeing what that certificate's covering. So it's a lot harder to fake a certificate when they have to require backup of a policy itself with it. So I know it can be a lot.
That's a great point, and that's why I wanted you to get that out there. Another thing that I always like to do when I was on the operational side is have that certificate not come from my subcontractor, but actually come from their insurance company, yes, to start with. And the reason why I like to do that is because there was a lot of people out there that would get their insurance, and it was legit at one point in time, but they didn't make their payments. It got canceled. So, but you brought up a great point. I just want to hit the home on that again about reviewing the policy, because especially that may come into play if you have a subcontractor that uses a employee leasing company to run their employees through, which I know that could be. We may even have that on here. That may be another topic coming up later on one of the other podcasts, but that's a whole other thing. So I think it's your great point. If you got a copy of what the actual policy is, and there should be no issue for anybody giving you that. And then again, once you get used to, and on the operational side, we recommend when you get a good subcontractor, you want to keep working with them, and that limits your risk as well. But you got to vet them. That's the most important thing.
And if they resist, it's a big red flag, right, John?
Yeah, there's always a reason. If somebody is unwilling to do something that should not, it's like if you're unwilling to provide information that is normal, there's usually a reason for it. So
it also shows the other characters that they work with. If they're not used to that question being asked, then it shouldn't be that uncommon. It makes you raise the question, who else have you worked with that hasn't asked you for this information?
Exactly. And a great point too, that we talked about earlier, this is a huge segment of the industry using subcontractors, and it's not going anywhere. It's going to grow. There's actually more and more companies starting up and going into business with the intentions of just being a labor provider. So they don't have to go through all the other hassles of, maybe don't want to have the equipment. They don't want to have to buy the materials, because right now that's where the market's hot. If you've got a good crew and you can go into your own business, you're going to make some good money today. Oh, yeah. So that's a big issue, issue, and going to continue to grow in there. I don't know if we touched this or not, but what about how often should you request a new insurance certificate, or how often keep the records updated? Any recommendations on that? If I'm the company now and I've got you guys signed up as my subs, what should be my auditing policy? I would say probably be the best way of putting it.
So that's a great question, John. So at this point, right, we have requested the certificate of insurance. We have requested the forms and endorsements. The coverage is there. It is in place. It's covering what we need it to cover to protect ourselves as a roofing contractor. But like you said, I mean, there's some cash flow issues. Maybe payments have ceased and that coverage is lapsed. The only way, there is no mechanism on the internet to check like ABC Roofing still has GL insurance for the next 6 months. That there is no mechanism to make sure the coverage is still in place, especially on the general liability side of things. The only way would be is to request updated certificates of insurance every so often. And again, like you said, it is probably a good practice to have that come directly from the insurance carrier or agent rather, instead of coming from the subcontractor. But this world of certificates, I think Tyler touched on this a little bit. We feel that is kind of a flaw in the system, that there is no way to get real-time updates on who has current active insurance and who does not. But the only way that really we see that being possible, that you can vet out your subcontractors initially, and then over the course of that policy term, make sure that that coverage is still in place, is to request those certificates, I would say at least quarterly.
Yeah, I mean, so depending on how much you're using subs and how big of a part of your business it is, if you'll see the larger GCs, what we're seeing quite frequently nowadays is actually getting the carrier to put on as an endorsement of policy. It's called a 30-day notice of cancellation, John, and it costs extra money. And there are times when, as a business owner, where you got to make a decision. Of course, we always advise it. And some GCs are unwavering. And what happens is our clients that work for them, they say, hey, if we want to work for them as bad, then we got to go to our insurance agent and we got to get them to be listed an actual named recipient of a 30-day notice of cancellation from that carrier. So if it does go into effect, you're notified. It's not that easy to do. Subs will resist. And that's the question business owners got to ask themselves, is how bad do they need the labor? Because we don't want to get in the way of production, staffing, backlog, the core fundamentals that they're looking to run a business, and not only thinking we get it, we know our world's important on the risk management side, and we think that it's everything, but business owners aren't always thinking of it. So 30-day notice cancellations are available. And it's just a matter of how strict you want to get with your subs. And we as the insurance agents certainly advise it the same way that these large GCs insurance agents advise them too.
Well, on an operational risk standpoint, I would advise it as well for a couple of reasons. One is you have to understand, as a business owner of your own company, if I have my subs on board and they lose their insurance, whatever the reasons happen, at the end of the year, as the owner, I'm getting audited by my insurance company, and it's going to come out at some point. It will come out whether or not they actually had coverage. And guess what? As the business owner, you're going to pay for any coverage that wasn't provided by someone else, same as if they were on your payroll. So you're going to face the expense. So again, you got to have a good relationship with your subcontractors. You want to have that open relationship. And again, these are red flags. And I know sometimes it hurts, but it's no different than you working for a general contractor. If you want to work for them, you're going to do these things to continue with that great relationship. So,
Yes.
Just keep that in mind. It's going to come out of you at one point or another. You're going to pay. There's just no way around it. Let's do this. I do have a few minutes here. Let's close with that PEO employee leasing. I know. I mean, we could do a full podcast on that. I know, but I'll kick it over to you guys to kind of just give a little, summary of the importance of that and what to look out for.
Certainly. And so PEOs, absolutely. And we're talking to emerging roofing professionals, right? So it absolutely, if they serve their place in the market, it is where almost every single one of the people that are watching this podcast have either been through or dealt with. It's where you have to start. Most standalone carriers, when I say standalone or refer to that, that's a work comp policy that covers your company as a whole, not the individual policy, not the individual people that are on the policy or PEO. PEOs are professional employer organizations. It's an employee leasing arrangement. Essentially, from that standpoint, each individual is the one that's carrying the work comp through a policy that the company puts in place. But if they're not on that roster, they're not covered. And so when we're talking about downstream risk transfer, workers' comp, anybody on that job site has to have coverage. When you provide a standalone certificate, there's at least some feeling of comfortability when a GC hires your company that, hey, everyone, no matter if they're on a roster, what they are, they're covered. Well, the only way to monitor employee leasing arrangements or PEOs when your sub has one, if you see a certificate, advise you run it again by your insurance agent and say, hey, is this a PEO? Because it's something to be aware of, because we share with our clients that they should be requesting a roster every day that they show up to the job site. And if that 5-minute task is too much, or you think it's going to upset the sub or get in the way of any relationship because you're doing your due diligence to make sure that everyone on that job site's covered, then maybe the sub doesn't value the relationship enough to work with you, that they can't provide a roster of their employees. It takes 2 minutes to scan over before they start work. And so that it's just absolutely, and that, as Nick mentioned earlier, with exemptions. If somebody has an exemption, those are only for the officers of the company. There should not be 5 guys on a job site when they were providing an exemption to them. And if you look past it, and if you're the prime as a roofing professional, if you look past it, it's rising upstream to your policy. And if you have a PEO, they're not on your roster either. So there's going to be an area where there's no coverage. And certainly we know that these work comp claims can absolutely get elevated and escalated very quickly. So making sure it's not just about you got the certificate and for your own audit purposes. Because by the way, if there's an exemption and you pay a sub with an exemption that they provided you over a certain amount, well, there's audit ramifications too. At the end, if an auditor sees that you paid somebody with an exemption $250,000 at the end of the year, they're going to come back and say, how did one man with an exemption perform $250,000 worth of labor? When the thought process is, if they have an exemption, that they're not just working for you, they're working for other people as well. Mm-hmm. So explain to me, and then it lifts up a question at audit. Explain to me how he did $250,000 in labor and also did work for other people as well. Because if he wasn't doing work for other people, why wouldn't he be brought on as a W-2 employee? So a lot of gaps and pitfalls to review, but monitoring the subs rosters, if they have an employee leasing arrangement, you have to know who is on that arrangement. And the only way to do that's that roster on a daily basis, requested from the employee leasing arrangement themselves. Like you said, not just a piece of paper on a Word document that shows the people that are on there, but actually a formal document from the carrier.
Yeah, no, great points. So the whole purpose of this, you guys out there listening, again, these can go much deeper dive subjects. Trust me, you could do 2 hours on each one of these. But the point of these podcasts in that is to get you this information so you're aware of what to look for. So, important. We covered a lot of important topics today. The employee leasing that we just covered at the end, that's a big issue. If you got, not that it's anything wrong with people, like you say, a lot of roofers have to start out that way to get going. It's not that there's anything wrong. It just makes sure everything's right. Because a couple things just can happen big time on that. I've worked with clients with this. Is one, you're going to pay the premiums if someone wasn't listed on their roster when they do the audit. And two, God forbid, somebody gets hurt, which is very common in the roofing industry, and they're not covered, you're going to pay for that. It's coming uphill. That's how it works. It always comes up till it finds where someone has a coverage to pay for it. So these are things you don't want to kick yourself in the foot and cut yourself off when you're coming right out of the gate. A lot to learn, good topics. I always recommend, this is probably one re-listen to twice because there was a lot of information in here. And again, Nick and Tyler, how do they reach out to you if they need any more assistance on this?
Both of our emails we can provide. I think that we did during the last one. Phone numbers, absolutely. Feel free to reach out via email, phone, either way.
Yeah, and mine's Tyler at FurmanInsurance.com. And Nick's is Nick at FurmanInsurance.com. And certainly happy to answer any questions. Look, John, we are consultants. You're a consultant. We receive a fee for our services. So as clients of ours, we advise them, have a good relationship with the agent, reach out to them, these questions, and it shouldn't be something that's, hey, this is more work if I got to talk to Tyler or Nick. And we're getting paid to do so. So we tell our clients, utilize us as much as possible, whether that's sending over subcontract agreements to review, policies to review to make sure the coverage is there, PEOs, asking questions and educate yourself, because if we don't know about it, then we can't help protect our clients, but certainly we're there as a resource.
Absolutely.
And advise they do.
And to that point a little, and John, to your point, even, as an emerging roofing contractor, there's a lot to learn. There's a lot of different aspects of the roofing industry, and there's a lot of things that take priority, driving margin, securing, backlog, those kinds of things that you need to keep food on your table for your family. If there's anything that we can help move that process along, help educate a little bit on the insurance side of things, we know from personal experience handling 194 roofing contractors every day, things can go wrong in the roofing industry, as you know, John, as well.
Yep.
These things with the subcontractors seem like, okay, they have coverage, they're in place. We don't want to look any further because we don't want to know what we'll find. The problem is if there's a claim, somebody's going to look for that. Somebody's going to find those loopholes, and the primes and, project managers and things, they're protected by downstream risk transfer to you as a roofing contractor. And if you didn't make the efforts to protect yourselves from whomever you hire as a subcontractor, it's going to stop with you. And this company that you're working your behind off to build is going to get shot in the foot, like you had said. So it is super important, and we're happy to answer any questions you may have about it.
Excellent. Yeah. So, everybody out there, I tell you, 45 years I spent as a contractor, and there's 2 tips I can give you about burying your head in the sand that they'll come back and put you out of business quicker than anything. One is taxes. So if you ever have a tax issue, you got to jump in and handle it, because that'll kill you. And the other one's insurance. It doesn't go away. Problems don't go away. They just grow and fester, and they become too large to tackle. So that's why we're doing these, getting you this information. Get a great partner out there, work with them. As you've heard us say before, you got to have a good accountant, a good attorney, a good consultant, a good insurance agent. You need that team. Once you got that team, and sometimes, one person acts as, sometimes you get an accountant who is your consultant, depending on how you work it. Doesn't matter. Have your own little advisory board. The little bit that it's going to cost you in the beginning to get going for that, it's going to pay off in the end. Again, you reach out to me at jkenny@cotneyconsultinggroup.com. I'm happy to get you anything you need, put you in touch with these guys. And also, anybody listening to our podcast here, if you reach out to me, feel free, and I'll send you a free copy of my book, Blueprints to Your Business. That really lays out everything you need to know from start to finish. I'm happy to send it to you for free for listening. So happy to have you guys here today. Now, next one we have coming up next month is going to be on experience modification ratings, EMRs. What I want to tell you, that's a great one for a couple reasons. If your EMR is not very good, it's going to cost you a lot of money. But more importantly, we'll touch on some things about how you can work that, get your mod rates down. It's better than a savings account. That's great money in the bank for a contractor managing their EMR. So those are the things we're going to touch on next time. I want to thank everybody again. I want to thank you guys for joining, and we'll see you on the next one. Thank you very much. Take care.
Of course. Thank you, John.